Well, one of Europe's most important and oldest banks has failed. Credit Suisse is the third major bank to go down, following two in the US last week. But this time there's been an emergency buyout deal. Switzerland's biggest bank, UBS, to the rescue. It's buying the failed Credit Suisse for just over 5 billion New Zealand dollars, less than half what it was worth days ago.
It was no longer possible to restore the necessary confidence, and that a swift and stabilising solution was absolutely necessary.
167-year-old Credit Suisse was considered a globally important bank, too big to fail. The buyout is being financed by Switzerland's national bank and its government in a bid to calm panicked markets. It comes just after the United States' Signature Bank also failed, along with Silicon Valley Bank, the largest banking collapse since the height of the global financial crisis.
Authorities know what happened in 2008. They had that real life experience of when banks go under, bad things happen to the economy. So they will be working absolutely through the night to make sure that it doesn't affect the rest of the system.
So could any contagion spread to New Zealand's banks? Experts here say no.
Our banks are well capitalised, they are highly regulated, they face strong stress tests, so things should be okay.
But if more overseas banks go down, there could be other effects here. For more on this, Associate Professor Claire Matthews from Massey University's Business School joins us. OK, Claire, so 3 bank failures so far. Economic conditions are expected to worsen. Could we see more banks go down over in the US and Europe?
I think there is a strong possibility that there will be more banks to fail, particularly in the US and possibly in Europe. It is important to know that the failure of the banks in the US and Credit Suisse in Europe are quite unrelated, but there are conditions that suggest that we may see some more failures, and there does tend to be something of a contagion effect. And we've seen it in the US. We had the failure of SVB, and that's been followed by the failure of a couple of other banks, and there's some other banks that are clearly looking risky.
It does not sound good. So our banks should be okay. We're much more heavily regulated, but there could be other effects on investments like our KiwiSaver if more banks go down, right?
Yeah, that is the issue, because some of our KiwiSaver funds will have investments in the banks that are failing. And also it will have an impact on the stock market more generally. There'll be some volatility in the stock market, and that will also flow through to KiwiSaver and other managed funds.
But don't go running to get your money out.
It would be recommended that if you've got any concerns about your KiwiSaver, that you seek some advice from your provider. But in general, it wouldn't be recommended to take your money out. Well, you can't take your money out, but to transfer it from a more equity-based fund to a cash-based fund, because what that does is basically crystallise your losses, and it makes it much harder to benefit from the recovery that we will have in due course.
OK, Claire, so tell me, what happened? Did these banks make some really bad calls, or was this based on market fear and people just all rushing to take their cash out?
It's a little bit of both. There'll be a major examination of exactly what caused these banks to fail in due course. But what we know at the moment is that they've probably done some things that weren't the most sensible, but that's with the benefit of hindsight. That's not to say that they were wrong, clearly wrong at the time. Credit Suisse have had some problems for a few years now, and so that's now finally come home to roost. With Silicon Valley Bank in the US in particular, it just did seem to be a combination of not perhaps having fully understanding some of the decisions that they'd made in the past in terms of managing what they thought were their risks, and they were actually creating other risks that potentially they didn't see. And then what happened is that you had depositors saying, well, actually, given some of the actions that we're seeing, we've got some concerns, we're taking our money out. And once that happens and it flows through to quite a few people trying to take their money out, that creates significant issues for banks that they really struggle to cope with.
It's so interesting. Claire Matthews from Massey University, thank you so much for your insights this evening.
Thank you.